Gold enters the new trading week at an interesting point, and to understand why, let's begin with the bigger picture. Now, looking at the daily time frame here, the long-term trend remains bullish. Since April 2025, as you can see on the chart here, price action has continued to form higher highs and higher lows, and this has been supported by a series of ascending trend lines that reflect the strength buyers have maintained over the past year. However, when we zoom into the last 8 months, another important observation begins to emerge. As you will see, price action has repeatedly found support around the psychological $4,000 level. We saw buyers defend this area in October last year, and more recently on the 11th of June when gold once again reacted strongly after testing this zone. This tells us that the $4,000 level is more than just another support level on the chart. It is a psychological level where many market participants continue to view gold as attractive value. It is also a level where long-term buyers appear willing to step into the market whenever price declines towards it. Part of that demand may also be linked to the uncertainty that continues to surround the global economy, geopolitical tensions in the Middle East, and the role gold traditionally plays as a store of value during periods of instability. For now, the important thing to note is that despite the recent weakness, price action remains above this long-term support structure. That suggests buyers have not completely lost control of the bigger picture just yet. At the same time, price action currently sits close to the midpoint of the broader range between the $4,000 and the $4,400 area. And that brings us to what may be the most important level for the coming week, the $4,180 zone, which is going to be the key level during the new week. This level sits almost at the center of the current market structure and could provide important clues about whether buyers are preparing for another move higher or whether sellers intend to push price back towards the $4,000 support area. Now, when we scale down to the 4 hours time frame, the picture begins to look very different. While the long-term trend remains bullish, the last 2 months have been characterized by a series of lower highs and lower lows. In other words, the market has been retracing. Part of this weakness can be linked to changing expectations surrounding the Federal Reserve. Over the recent weeks, inflation data has remained relatively firm, while the Fed has maintained a cautious stance on interest rates. That combination has helped support the US dollar and Treasury yields, both of which tend to create pressure on gold. As a result, sellers have remained active, and price action has continued to respect this broader descending structure. Now, the big question is whether this retracement is coming to an end or whether there is still room for another move lower. And that is exactly what traders will be trying to figure out next week. When we look at the broader structure, price remains trapped between two major levels: support around the $4,000 and resistance around the $4,400. Despite all the volatility we have seen recently, the market has not yet committed to either side. Instead, price action continues to trade around the middle of the range. Once again, bringing our attention back to the $4,180 level, as you will see here on my screen. If buyers can reclaim control above this area, the market may begin to challenge the upper part of the range once again. However, if sellers maintain control below it, attention may quickly shift back towards the $4,000 support zone. To get a clear picture of what traders are currently doing, let's zoom into the 1 hour time frame. Now, on the 1 hour time frame, it becomes much easier to see how sentiment developed during the second half of last week. You see, after testing the $4,381 area on the 17th of June, price action began forming lower highs and lower lows, creating the short-term descending trend line we see here on the chart. Part of that move came after the Federal Reserve maintained a relatively firm stance on interest rates. Although the market did not receive any major surprises, traders continued adjusting to the possibility that rates could remain elevated for longer than previously expected. And of course, that helps support the US dollar while reducing demand for gold. However, something interesting happened towards the end of last week. Despite the selling pressure, the market stopped making significant progress lower. Instead, price action began moving sideways. The result was the formation of a range between approximately the $4,125 and the $4,180. This range reflects a market that is waiting for new information, waiting for a catalyst, and that catalyst may arrive next week. Looking ahead, traders will be paying close attention to several economic releases. On Tuesday, the preliminary manufacturing and services PMI figures will provide fresh insights into the health of the US economy. Then on Thursday, attention shifts to the core PCE inflation data, which remains the Federal Reserve's preferred measure of inflation. These releases could play an important role in shaping expectations for future interest rate decisions. At the same time, traders will continue monitoring developments in the Middle East. Particular attention remains on the Strait of Hormuz after Iran announced renewed restriction following accusation that Israel violated the recent peace agreement. While the impact on global shipping remains uncertain, any escalation in geopolitical tensions could quickly influence market sentiment and increase demand for traditional safe haven assets such as gold. If upcoming data shows signs that inflation pressure are beginning to ease, or if economic data points towards a slowing economy, traders may begin reducing expectations for future rate hikes. That could weaken the US dollar and support gold prices. From a technical perspective, a break above the 4,180 level could also mean price has broken above the current range resistance and the short-term descending trend line. A successful retest of the structure could strengthen the bullish case and potentially open the door towards the $4,400 resistance level. On the other hand, if inflation data comes in stronger than expected and continues to support higher for longer interest rate narrative, the US dollar and treasury yield could remain attractive to investors. That will likely maintain pressure on gold. In that scenario, a break below the 4,125 support area could signal a continuation of the current downtrend. And if sellers remain in control, attention may quickly shift back towards the major psychological support around the $4,000 level. For now, all eyes still remains on the 4,180 level. It sits at the center of the current market structure and may provide the clearest clue about the next meaningful move in gold. Let's see how the week unfolds.